welcome to today's GoNoGo show. It is May 4th, 2023. May the 4th be with you, Alex. Thank you for joining me today. How are you doing?
Very well, very well.
Excellent. Recovered from last week, perhaps?
Yeah, what a great couple of days that was. Absolutely fantastic.
Yeah. We're talking about the CMT Association's 50th anniversary symposium in New York City. Sorry we couldn't join you last week, but we were out there learning, which is a big part of what Alex and I try to do every single day and every single week. Tremendous outpouring from the technical analysis community. Great to see all of our StockCharts friends there as well, and looking forward to sharing a lot of those lessons that we took away from the conference in these weekly shows ahead. But Alex, let's turn to what people care most about. Where the markets are at. Let's start with our top-down cross-asset heat map using GoNoGo charts, and just take a look at where the markets are at right now.
Yeah, so we've obviously pulled back for a few days in a row now since we got that barely higher high on Monday. But we are still in a go trend, right? The weight of the evidence still says we're in a go trend on equity markets. Of course, there are weaker aqua bars for most of this week. Treasury bond prices have strengthened, returned to paint a stronger go bar as of time of recording. Mm-hmm. Commodities rolled over to join the dollar in a strong no-go trend.
Yeah, fascinating to see yet one more rate hike from the Fed yesterday, yeah. and bond buying, sort of the reverse of what most would expect. Let's turn our eye to a chart of just the S&P 500. Let's take a look at what some of those highs were last week. CMT Association closed markets Thursday afternoon at the floor of the New York Stock Exchange, 2% up on the large index, 3% on the Nasdaq, and we've been pulling back and consolidating since. Yeah. From a GoNoGo perspective, Alex, my eye immediately is drawn to the oscillator in the lower panel, where we're starting to see a little break below that zero line of negative momentum divergence from this go trend. Talk to us a little bit about what you're seeing from a trend perspective.
Yeah, I mean, it did feel like a bit of a celebration, right? On Thursday, we were all on the stock exchange floor. The markets had closed up with a really strong day. And we've fallen away from that since. And what you're referring to is this area down here on the bottom panel, where the oscillator is struggling to stay above zero. We can see that we've just dipped below again today. Volume has picked up this week on some heavy days of trading, and you can see divergence as the oscillator makes lower highs while price makes higher highs up in the price panel. So certainly a little bit of concern here. We're definitely going to want to see price hold at these levels, and we'll see going forward.
You know, I'm not Steve Nissen. Nobody would mistake me for such an expert, but Monday's bar looking a little bit like a spinning top, closing at the lows. Certainly from a very short-term price pattern perspective, that looked a little toppy.
Yeah, I mean, that's a graveyard doji, isn't it, right there? You see the open and close at similar levels with a longer upper wick. So price tried to go higher, but the bears brought it all the way back down to close right near the open. So, you know, certainly a day that suggested there was going to be a couple of struggles ahead, and that's what we've seen this week.
Absolutely. Let's bump this out to a weekly perspective. You know, we've talked week after week on this show about many different charts reaching their overhead supply areas, hitting some resistance. You know, oftentimes we can see that leads to a bit of a pullback. We can get rejected first one or two tries. From a weekly perspective, still in that strong go trend condition. Blue bars, even with this week's heaviness, and we're still seeing positive momentum.
Yeah.
Right.
Yeah. I mean, this is a go trend being established from the longer time frame. You can see how the oscillator was able to successfully stay above zero as we ended the no-go correction, and then has found support there several times, and most recently a couple of weeks ago as we changed color in the price panel to paint those go bars. And, you know, we were talking a lot about this higher low that we saw, which was the second higher low since what some people are calling the ultimate low in October. We didn't quite eclipse the highs on the interweek basis that we had here in January, but we did have a higher close. So, whether or not this is a slightly higher high or not, it's a good sign if you read it that way. And we'll be looking to see if we can certainly make sure we set another higher low where we don't go below the levels that we saw back in March. So at the moment, we're seeing higher lows. We're seeing the Go trend in place. We definitely want to get above these levels around, 4150 on the S&P, and then close and sustain those prices. But as you said, positive momentum, Go trend still in place on the larger time frame.
There are a lot of fantastic analysts, both on stage, in the audience, celebrated money managers joining us at the 50th. Many of them talking about sentiment data. And what I would share with our GoNoGo audience is that 1 year ago, the very first week of April, you see that neutral Go Fish bar on this weekly chart. When we convened the technical community, it was unanimous, complete consensus about the bearish conditions for the market. Everyone calling for a lot of downside movement on the top level indexes. This year, we did a lot of the same polling questions about where people were positioned, what they were seeing, and I think unequivocally, everyone has agreed that markets can move in three directions: up, down, or in this case, sideways. And we've been range bound for some time, but I think the consensus view that could continue at the index level is really fascinating, because I think for the money management industry, there's been such a prevalence of passive funds. And if you're just holding the index, we end 2023 right here at these levels, you haven't returned anything for your clients. And I think that in this environment, active asset management and those who know how to responsibly use technical tools, we can really see that shine. So we got to get under the hood. After all, it is a market of stocks, not a single stock market. Let's check in real quick, Alex, on our intermarket charts. Let's pull up the TNX to take a look at where Treasury yields are at in the wake of yesterday's Fed announcement.
Yeah, and you could talk to 10 different people and get 10 different ideas or 10 different opinions, but the Treasury rate trend continues to paint no-go bars, which is a good thing if you're looking for that sort of bounce in stocks. We're certainly at levels that have been support so many times on this chart. So we're going to be very interested to see if we can get lower. But momentum has broken back below the zero again, and we've got another stronger dark purple bar suggesting that this no-go may continue, and that could be provide some relief. Interesting charts. Let's take a look at another no-go. Let's pull up a chart of the dollar index. We use UUP as an ETF ticker symbol so that we can get a sense of volume as well on the dollar index. Not precipitously lower, but still in a no-go trend. Yeah, similar. There's areas of support down here clearly on the chart, and we've been sort of falling to and bouncing around those levels. Interestingly, there is some divergence on the oscillator as it sort of struggles to move away from the zero line. You can see the higher lows there on the oscillator as price goes sideways, or perhaps you could consider this slightly lower. So we're going to want to see what happens here at the zero line. If we get any kind of further price deterioration, that would send the oscillator back into negative territory, which would then be in line with this no-go trend. Absolutely. We talked about the commodities index also in a no-go trend, but let's just pull up a chart of gold first and take a look at how that's been performing. Consensus amongst the contrarians, boy, that was a little double on. Consensus amongst the contrarians was that gold was extremely constructive. A lot of strong bullish activity amongst the technicians for what they're seeing in gold. Is that a breakout to a new high on the daily basis? Certainly is. It looks like it at this point. And, to your point, I don't know if you can use consensus among contrarians. I don't know if that's allowed. I think we should scrap that one. But certainly that was the feeling. And I know we bounced this chart out to look at the monthly and talk about that really, really large cup and handle. But on a daily basis, even here, yes, we found support again as the oscillator found support, burst back through zero on heavy volume, squeeze broken. and we've had a couple of days now in a row of strong bars, and it does look like that is a slightly higher high, which we know that we closed higher on a weekly basis all time, so perhaps this would even push us over those monthly highs.
Absolutely. We'll be looking at those long charts for sure as we come to the end of May and we approach those penultimate highs.
Right.
Let's look at the chart of U.S. and take a look at what's happening in terms of the inflation brigade and what we're seeing in the energy space.
Very similar picture.
To chop a little lower. No-go bars back to strong purple here on the weekly basis. Heavy week in the oil markets, and back below zero. GoNoGo oscillator on heavy volume. Yeah,
absolutely. Just as you read it out there, back in the trend, back below the sort of downward sloping trend line, and oscillator now confirming by bursting back through the zero line on heavy volume. So this slow marching downtrend continues in oil.
Excellent. All right, let's turn our eye back to the equity space. Let's take a look at our sector rel map, get under the hood of the S&P 500, and take a look not just on an absolute basis, but on a relative basis. A couple interesting comments made. Ralph Acampora actually on our live showing of the final bar with David Keller said that rotation is the lifeblood of bull markets. And what he's talking about there is seeing new leadership emerge throughout the bullish phase, extending breadth and giving us a lot of other opportunities. Right now, we're still in this bifurcated market. Alex, maybe we should stop calling it the stock market and start calling it the SPOC market, as both growth and defensives continue to lead this rising S&P 500 on a relative basis. So this is every sector of the S&P relative to the benchmark index. Talk to us a little bit about what we're seeing on this heat map.
Well, what was interesting, I think, over the last week or so was a brief wobble in technologies, a wobble in communications, and then in the other side, a wobble in utilities. But now we've returned to really paint the same picture that we've been seeing for the past couple of weeks, where technology is outperforming on a relative basis, as is communications. And then also outperforming on the other end of the map, we've got healthcare, staples, and utilities. So that's the strange barbell kind of phenomenon where we've got growth and defense outperforming.
You know, a lot of talk about sort of the narrow leadership of this market. We're seeing within the communications sector, a lot of those favorites from the stay-at-home trade: Google, Alphabet, Amazon, Facebook. We've seen those strong outperformers, and we talk about them nearly every week here on the GoNoGo show. What was interesting amongst a lot of the analysis presented last week was the discussion around the financial sector, and that community banks and regional banks, some of the smaller municipals, obviously dominating our headlines, recent collapse in Signature. We've seen a lot of folks, reacting emotionally to what's happening in the financial sector. But even just this morning, I was on a call with another trader who was talking about trying to buy dips, trying to get exposure to things that were so beaten down. We don't catch falling knives in the technical community. We want to look for some confirmation that the market agrees with us. But let's take the second half of today's show, Alex. Let's examine if we had to keep a toe in the water, as many money managers do. They have to maintain exposure, maintain broad diversification. If you have to have exposure to the financial sector, where would you want to place your capital? And for that, we can look under the hood of the XLF, the financial sector, which is arguably lagging the S&P 500 steeply. But within that financial sector, you've got areas of outperformance, right? So obviously, community and regional banks is not the place to go fishing. But if you had to have some exposure to the financial sector, you could look to things like insurance brokers, reinsurance companies. There are a lot of segments, industry groups within financials that are leading. So let's just pick on one. Let's get into the insurance brokerage industry subgroup of the financial sector. And for that, we can, yep, there we go. Oh, that's USO, sorry. So if we're looking at a lot of damage in financials generally, and a lot of pessimism around the banking infrastructure, certainly we haven't seen the systemic risk that everyone was so worried about. This wasn't a solvency problem; it was a liquidity problem, as our friend Jim Bianco continues to report. But what we're seeing in the insurance brokerage is indeed an absolute go trend, right? Relative to the sector, this is a industry group that's outperforming. But from a trend perspective, we're just coming back to retest after some strong gains. What draws your eye from this chart here, Alex?
Well, I just think the point that needs to be made is that you could be long some parts of the financial sector and be up. And that's a remarkable way to think about it when, if you ask people, even people with really, strong knowledge of what's happening with the economy and the markets, they would assume that the financial sector was down. And yes, overall, we saw that XLF is underperforming the market. We know that all of those individual tickers that we've looked at over the past few weeks with the banks, the regional banks, and how they've been really hammered, and no-go trend started several weeks ago. But you could be taking a trade over the last couple of months to go long insurance brokers. And to your point, if you need to be exposed to a certain area of the markets, you need to be able to find the areas that are outperforming and not just take a blanket position in a larger index. So what's interesting about this chart, Tyler, is we've had higher highs. This is outperforming even the S&P, right? We've had higher highs here, higher than the highs back at the beginning of the year. But now we are testing the zero line. The oscillator falling to the zero line as price corrects from its counter trend correction arrow here at the high. And we're going to watch to see if it finds support. So right now, after this go flag here, we're in positive gains. And we're going to look to see if there is an opportunity to re-enter this trade. If we find support, we'll get a go trend continuation icon. If we don't, then we could exit the trade, but have had a small win in the financial markets.
Absolutely. And let's pull up an individual security within the insurance brokerage space, Goosehead Insurance Incorporated. That's GSHD is the ticker. And I think we're going to see a somewhat similar picture.
Yeah, even better. We don't see the pullback in Goosehead. So to your point, knowing where to look within markets to find out performance is critical. And you can go from asset classes down to sectors within the S&P, down to sub-industry groups within those sectors, and then down to single securities that are outperforming those sub-industry groups. So if you say that all in one sentence, it gets quite tricky. You're looking for a security that's outperforming the sub-industry, that is outperforming the sector, that's outperforming the index, that's outperforming the asset classes. Right. But if you can get there and follow that 4 or 5 step process, you end up with a go trend in Goosehead Insurance that's been supported several times through max go-no-go squeezes as the oscillator continues to find support at the zero line, and you see a series of higher highs and higher lows.
Now, I know we've talked about this in our specials for StockCharts TV, but let's break apart for a second what that go-no-go squeeze is really telling us, and everything that's happening in that lower panel.
Of course. So we always will use the complete suite of tools to frame our decision making, and you can see this no-go correction that started at the beginning of the year, entered no-go territory, and we would then be looking for the oscillator to stay below zero if the no-go trend was to continue. Now, quickly it broke back above zero and found support at zero before the go trend was then re-identified. So now we know this was a correction, nothing more serious, a go trend re-identified. And as this go trend pulls back, we'll look to the oscillator to see if it finds support at the zero line. And given that the zero line is so important, we then know that if the oscillator stays at zero for several periods, what that's telling us is that all of the inputs to our momentum oscillator are in their neutral territory, meaning that there isn't a lot of directional momentum, no enthusiasm of buyers or sellers. So after a move in price, we see that cooling of momentum and the oscillator ride the zero line. And so that becomes a volatility squeeze. And when that squeeze is broken, and in this case, it's broken in the same direction as the trend, then we know that momentum is resurgent in that go trend. And we can see that continuation icon, and we can see a new leg higher. Same thing happens here. Price moves generally sideways after hitting this high with the go counter trend correction arrow. And then we see the momentum wanes again as price volatility shrinks. And we see the go-no-go squeeze climb to its max. We watch for the break. When that happens, we know momentum is resurgent in the direction of the go trend. We see continuation icons, and we know then that there's a good chance of another leg higher. So that's how we would read the squeeze in that lower panel.
Absolutely. And as we've mentioned before, these can exist at either trend reversal areas, right? So topping patterns or bottoming formations, but also in trend continuation. The important thing to look for with the go-no-go squeeze, or if you're using Keltner bands or one of our beloved Bollinger bands, you want to trade in the direction of the break, right? And from that compressed volatility comes expanding volatility, and we can see high velocity moves in the direction of the break. That's fantastic, Alex. Thank you very much for walking us through that. I want to turn to a chart of Homebuilders real quick, XHB. And we joked with Urian Timmer and Jim Bianco a month ago. You could line up 5 economists and get 12 different opinions on when the recession is coming, what it's going to look like, how deep it might be, is there still a path for a soft landing? And we say this on the GoNoGo show all the time, which is that even if you could forecast exactly what the recession was going to look like, if it was going to happen, and we largely don't know until after the fact, right? The Fed data is lagging quarterly reporting. So the recession is already probably over by the time we can actually officially identify it by those measures. So what we can instead use to our advantage, instead of speculating about what the future holds, we can use the market as the discounting mechanism that it is, and pay attention to the message that is coming from there. So Homebuilders were a popular chart for a lot of the sessions last week, and I think it's worth noting, if we even just show a little more of the history or jump that to a weekly, it's another very large, what could be a cup and handle formation, right? Large basing pattern in Homebuilders. All of 2022, that was a really beaten down area. But we're seeing a lot of constructive evidence on the right side of that chart, moving into the go trend, of course, being the most obvious, but then continuing to find support at the zero line in that go-no-go oscillator. Right now, we've just broken out of that squeeze on the weekly time frame, and we're seeing strong evidence that we could break out again to the upside. Alex, I love the way you're pulling up that area of polarity. What was support became resistance, and here we are right at that inflection point. Talk to us a little bit about this chart.
I hate to be busily doing things while you're talking, so I apologize, but it was just jumping off the chart there, and I wanted to put it on. We've got this support here on the left side that then became resistance, and now we've struggled to break through it, but we're right back at those levels again. And this is that, we like to say, I like to say that, you can call patterns whatever you want, but basically it's a way to visualize the market dynamics and what's happening in terms of supply and demand underneath the chart. So cup and handle, yes. Ascending triangle, could be, you go into the details of how those things form. But what you're really saying is that buyers have tried to push prices higher than this level. And each time sellers have come in to drive price back down. And it happened again here in January. We're looking now to see if it can break through this final time. And the other part to mention is that each time buyers have come in more aggressively. So when we fail at this level, buyers come in a little earlier at a higher low. Buyers come in again a little earlier this time at another higher low. And then, of course, we failed. And now, look, we've set a higher low. So buyers coming in to buy each time a little higher while sellers are holding this resistance level. So, clearly something will happen. One will win. But at the moment, we've got a go trend in place. We've got buyers coming in at higher lows. We've got momentum on this weekly chart as the oscillator finds support at 0. So you can stack the weights in your favor by putting the weight of the evidence to your advantage.
Absolutely. And it's certainly really nice to see. Nobody's ever made a fortune rooting against the United States of America. It's nice to see this chart showing that there's indeed some strong economic activity happening under the hood. So for all of you who are watching this GoNoGo show on YouTube, thank you very much. Glad you're subscribers to StockCharts TV. You can also check out GoNoGo charts on YouTube, or head to our website, www.gonogocharts.com. We have a ton of free educational videos, more explanation about the indicators. And for those of you who are StockCharts users, make sure you grab the plugin for your ACP charts so you can use this as well. Next week, Alex and I will be presenting at the Traders Summit Monday morning at 11 a.m. and look forward to having you join us there. But if you can't make it on Monday, we'll be right back every Thursday afternoon at 3:30 Eastern for the GoNoGo show here on StockCharts TV. Thanks so much for spending some time with us. We'll see you again really soon. Bye-bye.